All right, let's get started. We're at the top of the hour. Welcome, everybody, to the next edition. This is our ninth episode of CCA of A 20-minute talks. I'm going to turn this session over to CCA of A President Umberto Matz, who will introduce today's speaker. Welcome to everybody.
Welcome, everybody, and thanks for joining us. I think we have an interesting 20-minute talk session today. Let me introduce Kevin Gaffer. Kevin founded EasyPay 365 in 2017 and draws on his 28 years of experience in the ARM and creditor markets, specializing in consumer engagement, payments for ad processing, ACH and digital wallets, payment portals, mobile web platforms, and email text messaging notifications to provide frictionless customer experience. His career path started in 1986 through 1993 at FedEx Ground, formerly known as RPS. Spent 19 years at Renkim and was CEO there from 2007 to 2016. Kevin graduated from the Ohio State University and resides in the Columbus, Ohio area with wife Cindy and has two daughters in the medical field. Everyone, please welcome Kevin Gaffer. Kevin, thank you so much for putting this together.
Great. Thank you. Thank you, Beto. Thank you, Annette. And thank you to the CCA of A for what you do. And I appreciate everybody joining and taking a couple minutes out today. And hopefully you take some good information away and learn a little about our company as well as what's going on in the payments world and what we can expect in the future. So not going to spend a lot of time on my bio. Beto did a great job. So spent 30 years in the ARM industry, started EasyPay 365, technically in 2016, but January 2017 is when we actually deployed it. Built and ran one of the big print companies in the collection industry. And interestingly enough, in 2007, after the markets crashed, everybody wanted to compress costs. So I deployed the first email product in that space, and all the attorneys said, I'm going to get agencies sued. And here we are today, and everybody wants to send things via email and not through the post office. But our primary goal with EasyPay is to assist companies to compress their payment costs, provide frictionless communication tools and technology, and most importantly, improving your yield per account and reducing your costs. Here are the payment types that we accept today. So the four major card brands: Visa, MasterCard, Discover, Amex. If you're in the retail consumer space and do medical, HSA, FSA, we have ACH product. And then for the online digital wallets, it's Google Pay and Apple Pay. So just a couple things that's a little different about the difference between commercial and consumer. And just to give you a little background, we do work with about 275 collection agencies and collection law firms in the US today. We also have other markets like e-commerce as well as traditional law firms. But there's one thing that I always say is every company in the debt recovery space bakes their cake a little differently. And everybody collects money, but they collect it in a different way. And a couple of the differences between commercial and retail consumer is on the commercial side, the reason why we focus on debit card is because that's the least expensive transaction that you're going to see versus a credit card. So it's 45% debit card in the commercial space and 75% debit card in the retail consumer space. Even though business types are different, the end goal is for everybody to get paid, pay the agency and liquidate the debt. So here's a little bit of some industry stats that we did over the last year. 88% of consumers expect a self-service option. 80% of consumers use their mobile device either when they're transacting or when they're calling an agency. 40% of retail collection agencies have deployed email, and it's actually now up to about 28% of retail agencies have deployed text messaging. We did some surveys with some of our customers on how long does it take an agent to actually facilitate a payment? And our average came out to be about 8 minutes. And I'll share a little bit further on why that's important and why this world we live in, everybody wants to self-service and not a lot of people want to talk to agents anymore. Here's three Trivial Pursuit questions that I think everybody will enjoy. Coming from the print world for 19 years, there's 170 million physical addresses that the post office delivers to. There's 246 million email addresses, but there's 310 million smartphones. And the reason why that's important is you'll see in another slide that how much the trend is going to mobile payments. And here it is. Shared this in 2024 with the CCAVA at the spring show. Look at where it was in 2020 when COVID hit, and look where it is today in 2025. And they're saying in 2025 that it's actually going to cap and exceed what 2026 estimates are. So it's going to keep going, and as we go into basically a cashless society, and everybody is using their phones because nobody reads their mail anymore and nobody goes to their mailbox. So getting to those consumers, whether it's via phone or via text or email, is actually important, whether it's commercial or even retail side. So there's three ways that transactions happen. The first one is direct bill. So if ABC Collection Agency was absorbing the fees, that's known as a direct bill. The other one is convenience fee billing, which we do with several of our clients, and it's a split line transaction, and it has to be split where ABC company gets $100 and EasyPay 365 transaction is $3. It has to be applicable by creditor, by state, and you have to provide a convenience where you are actually providing a convenience because they're typically doing it over the phone, or you've provided them some type of site to go to. Surcharging. So I found this to be interesting. The CCAFA had a show in Charleston a couple of years ago, and I was talking to several of the restaurant and the bar owners, and everybody in Charleston adopted a 3.25% surcharge fee. So we're starting to see that more and more. And I think if you go to gas stations, you'll see that they have a cash option and then they have a credit card option, and that's known as surcharge. In our space, most likely it's going to be a convenience fee, and it's going to be a split line transaction that our team sets up for our clients. Regarding how these transactions actually happen, a gateway. So let me explain. Not everybody knows what a gateway is, but think of it as it's almost like the device that you take your credit card and you tap. That gateway takes it from that device to the issuing bank to give you an approval or decline, and then that gateway portal allows you to pull in all of your data and reporting for your transactions. We actually have our own gateway, which is important. USAE Pay is a third-party provider, Authorize.net's a third-party provider, and Forte. And I say this sincerely that the reason why it's important is USAE Pay went down this morning. And, we haven't seen our gateway go down because we have 7 redundant servers around the United States. How people in the agency world can run those transactions is we have interfaces with most of the collection software. So that's where the agents are actually taking it inside of the CRM system. In Beto's environment, that would be known as Collect One. If you didn't want to have that integration, we have our own PCI virtual terminal, which I'll show a screen slide on that. But something that spawned out of COVID was one click. So with all the workers having to go remotely and PCI being important, companies and creditors didn't want agents who were working remotely to write down or get credit card information. So we created a secure link. You can send it via email or text to the recipient, and all they have to do is open it up. If it's via phone, it's already been authenticated. And I'll show you what those screens look like here in a second. The other one is a secure online portal. And then the last one is an online payment form. There are 2 other ones, but they're not very common anymore. One is an IVR, and the other one is where you actually buy a device and sit it at one of your lobby areas where somebody can go in and tap. So these screens right here, so we developed our own virtual terminal. It's all hosted. It's all PCI compliant. It's adaptable. The template at the top, it says global no fee. We can put multiple merchants in there. So if you have half your business is convenience fee and the other half is direct bill, all that information is built into this, and the agents just plug in the information. Agents can go in and make changes. There's dual receipts that go out if it's convenience fee billing. One goes to the consumer for their transaction with the agency, and one from Easy Pay 365 because that's what the card brand rules exist today. So here's one click. So one click, think of one click is most people are getting these via text messages today. And that one click product, if I was on the phone with Beto and he wanted to make a payment and I was working from home, I would go into one click. I would send him a text message. And since we've already authenticated his phone, all Beto's going to do is click on the link and it's going to pop up his account number. It's going to be fully branded with the law firm or collection agency's brand. And then there's your account number. We can style this however you want to, but the key to it is they get their text, they click on the link, they view it, and then the next thing is where if they're using their phone, typically all they have to do is click one click and it'll populate everything except for their security code, their CVV. And if they're on Apple Pay, it's typically facial recognition or a thumbprint. I want to go into the actual portal because portals became very popular because consumers in the retail space didn't want to talk to people, don't want to talk to people on the commercial side as well. So you send them a letter with a link, you send them a text, you send them an email. The consumers can go on, they can log in with their secure account number and typically some personal piece of information that they know, last four of social, date of birth, maybe their zip code, maybe there's a PIN that was provided that they can access. And the whole benefit to this is that they can self-service and manage their account. They have to go through, after they log in, there's an attestation page for FDCPA, mini Miranda rights. And then they pull up their account information. This information can be designed and we can render whatever, whether it's an account number, a judgment, if it's legal, if it is retail, there's going to be other specific information such as possibly creditor name. But consumer gets this, they click on the link, they can go into the detail of their account. All these account headers on the left-hand side are customizable based upon your business. But I want to make a payment. And once I go in and click on it, I'm going to give you some options based upon rules that have been set up by your team. You can pay in full, you can make a payment over time, or you can just make a minimum payment based upon a rule. Let's say maybe the minimum payment for this $625.89 account, maybe it's 10%. So they would be required to pay $63. If you wanted them to, and then after they've clicked on their payment information, you have the ability to see all the information. It's all stored. The agencies get a recap receipt, but more importantly, everybody wants to talk about negotiation. So we also have specific portfolio rules that allow you to set up some negotiation rules where you can allow them to make a recommendation. Here's my down payment. Here's what I want to pay. And as long as it fits into your business rules and logic, that transaction will go through. And then once they go to make a payment, Annette Wagner she'll pay all the bills because Annette's name's on this screen, but this is what the credit card contact information looks like. And then dual receipts come in. And then if you ever wanted to make a change on that payment, the consumer can log back in. We allow some companies to do, you can back up your payment by 5 days, back up by 10 days. But it notes that says you can only back up your payment 1 or 2 times. So if they try to do it a third time, it won't allow them. But those business rules are all set by the agencies and the law firms. So how do you get to these customers? Well, text messaging and email is an extremely important, cost-effective way. So this is one of our dashboards that we have. We just actually are going through a migration change of the look and feel of this, but it's either via API or you can send us an SFTP file every day, and those text messages will go out. It's all based upon time parameters. So if you're on the West Coast, and we don't want to send Greg Garner a text message at 6 in the morning, so we know that his area code is on the West Coast, so he's an 818, so he's going to get that text message at 9 o'clock in the morning to adhere to collection laws. If you ever needed to get reporting, you can get all of your reports via SFTP, or you can log in and download it. If you ever wanted to add a campaign or change a campaign. All of this information is sitting right at your fingertips. Going back to my days of running a print company, it would take anywhere from 5 to 15 days to change a letter. In this, you can literally make a change within seconds, hit save, and send yourself a sample message to make sure that it renders exactly how you want it to render on the phone. Now, let's get into this is the last screen we have. So this is on payments industry, as well as some regulatory things that are going on out there. Convenience fee and surcharging, the lobbyist activity that's going on. Every state is trying to lobby all of the legislative folks to allow for convenience fees, because everybody is doing it. Like I said, if you went to Charleston, everybody's charging it in restaurants, bars, and gift shops. Now, real-time payments and FedNow. Everybody knows what ACH is. Well, ACH was built on a framework back in the 70s. You send in the ACH, you get your confirmation, and then you get your funding anywhere from 3 to 6 days. Real-time payments and FedNow, that's being compressed. It's being handled today by most of the large banks, but not all of the consumers are allowing for RTP or FedNow. But it is going to be widely available and available to everybody. My guess, the government wants it to be done within the next 2 years. Here's the benefit. As soon as an ACH is transacted, it checks the balance in that business or that consumer's account, and then that funds gets released. They cannot issue a return then, because to do a FedNow, there's no way of them doing a unauthorized return like they do on ACH. Speaking of the government has their Credit Card Competition Act. It's a bipartisan bill. They're all trying to encourage more electronic payments and more choices out there, because the government is very concerned with cost of interchange fees, which is my next line item. So California, Colorado, Nevada, Texas, Vermont, they all have legislation on the books right now. They are really trying to go after Visa, MasterCard, Amex, and Discover to reduce those fees. And it's kind of like the old Durbin Act from 2011 that reduced debit card transactions drastically. A couple states that enacted their own, the lobbyists were successful. Colorado and Wisconsin do allow surcharge and inconvenience fees. And this is the last one that's going to be kind of interesting. So May 18th, Cap One acquires Discover Card, and Cap One is one of Visa's largest issuers. So it's going to be very interesting to see what that does with Visa's profitability as well as MasterCard. So I'm guessing that that's probably the reason why Warren Buffett got out of those two stocks in the last 12 months. And lastly, but not least, thank you very much for joining us today, and let's fire off some questions. So I appreciate everybody listening to my presentation.
I have a question for you, Kevin.
Sure.
And some people might be thinking this and not saying it. Can you tell us the difference, and if there is a difference between interchange fees and convenience fees? Can you go over that kind of in a sophomore kind of way?
Sure. So think of interchange fees. Interchange fees and assessments that's what Visa, MasterCard, Amex, and Discover, that's what they charge. So Visa, MasterCard, Amex, and Discover, they don't have salespeople. So what happens is, think of them as a rail. They're almost like a railroad line. So when you are using your Visa card, you're getting charged an interchange fee based upon whether it's a flat card where there's no rewards, or it's got some kind of reward tied to it, or it's got some type of cash back. So that's where the interchange fees come into. And then they always have their assessments, because they have to keep up with PCI compliancy or authorizations. And so there's actually three charges into a card: the authorization, the interchange fee, and then the assessment fee. Okay, so that's what costs anybody that's taking cards today. That's how Visa, MasterCard make their money. Now, what we do is, since we are basically a reseller of Visa and the card brands, they give us, any of us, the only companies in the globe that are getting any type of real discounts are the Amazons, the Walmarts. Everybody else is getting all the same interchange and assessment fees. And then the next part of that you had asked about convenience fees. Was that the next one?
Right. Just to clarify for the audience, the difference between all of the fees.
Okay, so a convenience fee is this. So good afternoon, Mr. Wassa Springs. So I call Lions Credit and I go to make a payment today. Okay. And because it's a moto transaction and I don't have to get in my car and drive to the post office or go to a bank to get a money order, Lions Credit is offering me a convenience to take that transaction over the phone. And as long as it is applicable by state, applicable by the creditor agreement, okay? CFPB wants it to be done in 2-line transactions, and so does Visa and MasterCard. So that's the convenience part of it, okay? Surcharging is, now this is kind of interesting. Surcharging came out of Brooklyn, New York, out of a nail salon where a woman went up to the front desk to pay for her manicure, and she said, "Oh, I'm going to pay with a credit card," and said, "Oh, there's a $1 surcharge or a $1 fee added to that." And she's like, "Well, how's that?" The woman paid before with cash. She got a $1 discount. So that actual case went up to the Supreme Court. And so they tagged it as surcharging. So if you are a creditor, okay, a creditor meaning a gas station, you've seen gas stations, the example I provided earlier, where pay by credit card, it's $3.10 per gallon. Paid via cash, it's $2.95. So they have to disclose that proactively on a surcharge. And same thing with convenience fees. If you ever charge convenience fees, you always have to give the consumer a free option. Tell them that, hey, you can mail in a check or a money order and you can pay us, and that's our free option. If not, we charge X% or X dollar for providing this convenience, so you don't have to go to a bank and run this transaction. Because again, specifically in the retail side, there's a lot of people that don't have bank accounts, so they're running everything off their credit card or debit card on a monthly basis. So hopefully I answered your question the way
You did. We have another question from Robert Ash. Hi, Ash. If laws are passed to prevent businesses from charging these fees to the consumer, won't the credit card companies increase their charges elsewhere, such as its annual fee just to have the card?
Yes. So let's go back to Rohit Chopra, the former director of the CFPB that just left as the director. So he was dialed in on credit card fees as well as late fees. So, if the administration would have stayed under the Biden administration, we would have seen some drastic changes from the CFPB, from late charges to reduction of possibly authorization costs for the businesses, or less expensive type of credit cards. Now that the administration has changed back to the Republican administration, they said, we're not going to cap what late fees are, and they're going to pretty much open the door. But Robert, you are correct that that is one of the reasons why, us being somewhat a cashless society today since 2020, a lot of merchants are looking at it going, we don't want to put a product or add more fees into our product. So if you want to pay by cash, there's a discount. If you want to pay with a credit card, that's your option. We're just going to charge you 2.75% of the sale, or 3%. The maximum you can charge on a surcharge or convenience fee is 4%. So that is one of the maximum numbers that exist out there today. And Robert, hopefully I answered your question on.
Said thank you.
Yep. And do I expect Visa and MasterCard to change their costs? I do, because just go back to what's going to happen on May 18th with Cap One buying Discover. If anybody in this group has a Discover card, I'm sure that you're going to start to see a lot of proactive solicitations to get rid of your Visa card and move to a Discover card, since Cap One's going to own it after May 18th. The Biden administration, from what I heard from the lobbyists that we talked to, the Biden administration was going to nix that that merger, from what we were told.
Hey, Kevin, I have a question with regards to surcharges or convenience fees, and I forgot what you called it. I think it was like a split line charge. Is that
Yes, split
okay?
split line transaction. So on a convenience fee, since you are providing the convenience, the way that the government wants it to happen is, and specifically this was, Gandhi and his team in the CFPB, they wanted to see it as two separate transactions because they didn't want that fee to be baked into the principal sale, because then it would potentially look like the agency or law firm is profiting from it. So that's the reason why they wanted to go with the split line transaction. And
So,
and and just so everybody's aware on this, didn't mean to interrupt you on that, Beto, but Connecticut, Maine, Massachusetts, those are the most common states that people block and don't charge any fees in, because they have legislation out there. But there's also lobbyists out there trying to push for those rules to be changed.
so your solution basically it allows for that split line charge, and so let's say that the agency charges, the consumer, the debtor puts $1,000 on the card. The agency gets $1,000, and you get, or your partner vendor, whatever it is, they get the convenience portion of it, right? So the agency's made whole.
Agency gets the principal deposit and the agency doesn't get charged for the transaction. So that is a way for everybody on this call, if you're looking at costs, that is a way to potentially reduce that cost. And let me just go back about 25 years ago. If you ran a retail collection agency, the three primary costs were payroll, postage, and phones. And now we move in today's environment. Payroll is obviously still number one. However, payment processing is always in the top 5 or 6 unless you're passing on some of those costs. Now, there are some creditors out there, okay, that do not want agencies or law firms to charge any fee. But there are a lot of agencies. I mean, Verizon, AT&T, T-Mobile, all of those companies, it's already baked into their contract. If you are an agency, they allow you to charge it. And in most cases, it goes up to as high as 4%.
I have a question from Rox. Example of gas station cash credit. If you use a debit card, should that be viewed as cash and not charged a fee?
So there are rules around debit cards that, and that's some of the lobbying that's going on out there today. So technically, they don't want you to charge a convenience fee on a debit card. However, there's lobbying, and we've had numerous discussions with Visa and MasterCard about this, that yes, we can bin block the first 6 digits of a card. We know whether it's a credit card or a debit card, but there is lobbying going out there that they want that rule to be changed, because a card is a card is a card. Okay. And that's the way that they're looking at it. That CCCA, the Competition Credit Card Act that's out there, that is part of that. They're relooking at the Durbin rule from 2011. Technically, by law, Visa doesn't want you to charge on a debit card, but I can tell you this, that there are about 95% of companies that, doesn't matter whether it's in our industry or outside of it, they're charging a convenience fee because they don't have ways to block it.
We had a
I mean,
question
it's
from
right.
Gail Clark regarding ACH. Says, regarding the instant ACH, does that apply to ACH initiated by the account holder and by a business receiving? We initiate ACH payments that the payer authorized us to process, and both directions cannot be returned, rejected as not authorized.
So is that a question or a comment? I'm just trying to.
So Gail, why don't you unmute yourself and ask Kevin directly. Are you still on? Here she is. Says, does regarding the instant ACH, does that apply to ACH initiated by the account? Oh, there you go. Hi, Gail.
Hi. Um, yeah, do you understand the question? I take that I wasn't sure if it was clear.
I
So
think you should restate it for Kevin.
Okay. So, we initiate the ACHs through a service like EasyPay. And you had mentioned that they cannot be rejected because of not being authorized. And my question is, sometimes we get ACH from the debtor, the person paying directly, that they initiate on their side. We don't, and I can understand why that couldn't be, they can't say it wasn't authorized. But from our side, we've had them say it's not authorized.
right. So Gail, let's take a step back on this. So there are two products out there. One was created by the Federal Reserve called FedNow, and the other one was created by the clearinghouse for ACH. It's called real-time payments. So those came out in 2017 and 2018. Most of the big banks have already adopted real-time payments and FedNow. The problem with it is it now has to get to every single financial institution, and all consumers need to accept it. Okay. We're hearing that within the next 24 months that we had heard from the government that FedNow, they're trying to push it because they want to change how ACHs are done. FedNow and real-time payments, it validates the bank account, it validates the balance, it takes the money instantaneously, and then the consumer or the business, they can't recall it. Once they approve it, it's there, and it's like a wire. Okay. Now, traditional ACHs today, even if I paid, Gail, if I called your office and said, Gail, I want to make my payment for $100 and you don't trust me, you send me an authorization form and I sign it, even though it's under this ACH clearinghouse today, I can still go back to my bank and say, I didn't authorize that. Well, they have an authorization form signed. Well, I was on medication. I didn't sign that. I didn't know what I was signing. And most banks will agree with the consumer. That's the whole reason. The whole purpose of FedNow and real-time payments is to move money faster and to kind of get out of some of these shenanigans that consumers play with, making a payment, issuing chargebacks, making an ACH, and doing an unauthorized return. So just be a little patient. Couple more years, you'll have FedNow. You may even want to talk to your bank and see if they have RTP and FedNow, your local bank. And if they do, you may even be able to start using it today by running your own transactions through RTP or FedNow. But it's going to be system wide in the U.S. I'm hearing within the next 24 months. But ACHs, just like credit cards, consumers and businesses can issue chargebacks and unauthorized returns, even if there's a receipt or a authorization form, there's a 95% chance that you as the recipient, you're going to win that. But there's that 5% chance that you're not going to win it because the consumer knows the bank manager and says, I was on medication. I mean, I've heard all kinds of stories from agencies and creditors around the country. So hopefully that answered your question, Gail, but I would call your local bank and see if they have RTP or FedNow or how far out they are to be doing this, because it's a great way to run transactions.
Right. Thank you, Kevin.
Hey, Kevin, I have another question. Can we talk about credit card payment chargebacks? So when we first had a merchant account, we thought it was, oh, great, so convenient. never really taken into account, I'll spill the beans here. We took in a $25,000 payment, give or take, on a judgment, and we released the judgment. We satisfied the judgment. 5 months, and I can't remember how many days later, we had a chargeback for $25,000 and some change on a judgment that has already been satisfied.
Did you
That's
get
a tough day at the office, Umberto.
It was a difficult pill to swallow.
so Beto, let me ask you this. Did you get an authorization form signed?
We did.
Okay.
And it still got charged back.
Yeah. And unfortunately that sometimes is the thing that a lot of people just they squirm when they see those chargebacks, because they know that consumers have that right where they can go backwards and charge it back. And if you have an authorization form and you have all the information, that's where whoever your payment processor was, they should have hopefully went to bat for you and said, here's all the documentation, here's the IP address, this was Joe Consumer, he approved it. This is not fair.
But like, isn't that because, the credit card company is going to have that customer for a long time at 29% interest, right? But for the agency, we're only paying 3%. But so it's kind of like a business a business decision on their part. I have a question, like how far can it go back? I mean, your example is 5 months, right,
6 months.
Umberto?
6 months is typically what
6 months.
Yeah.
So let me share something so we were in discussion. So Gandhi, who I think he still is employed by the CFPB, but I would spend a lot of time with him and John McNamara, and we're still in the beta testing of this product. That, let's say I'm on the phone with Frank Carroll. So I see Frank Carroll, and Frank and I are running a transaction, and I say, Frank, you want to pay $10,000? Yes. Okay, great. I need you. I'm sending you an e-sign right now via email. I need you to e-sign that, and then we'll run your transaction. Can you do it right now? Great. Well, let's just do it while we're on the phone. Frank e-signs it and sends it back. So one of the things that we've been trying to do is we've been trying to go back to all of the banks and Visa, MasterCard, and saying, you know what? If we're getting authorized signatures, you have to side with the merchant and not these consumers, regardless of what the scenario is. If the consumer is going bankrupt, that's not our problem. They needed to facilitate and pay off their account with a legal signature. So the conversation stopped because the administration's changed, and those guys, I'm not sure if they're working, but I can tell you that once we get the green light, we are going to finish that product, because we think that is that's the safest way for anybody in our space. I mean, when I talk to collection attorneys, collection attorneys are like, yeah, I just want wires. I like wires because they're big and they're protected. Or, I'll do an ACH, or I require them to send me a money order. I don't want to do a credit card, because it's the example that Beto gave, because we don't want to charge back. My advice there is this is when it's, and actually Fred Wasserspring and I had this conversation. We were talking about large ACHs, and Fred likes to do wires, and there are certain transactions that I wouldn't put on a credit card. There's certain transactions that I wouldn't possibly run an ACH, because maybe you have a gut feel that payer is just not ethical enough, and they may do a chargeback. Send and require them to send in either a money order or a wire. There's always certain times where you're going to feel comfortable, and other times where you're not. If somebody's not going to sign an e-sign authorization with legal document or legalese behind it, they're probably going to issue a chargeback or an unauthorized return. So, one of those fights, Beto, because we deal with it probably once or twice a week in our office, where people do chargebacks, and we've got signatures and IP addresses, and somebody on my team will pick up the phone and call the bank and go, hey, this needs to be moved up the food chain. Doesn't need to go to arbitration, because arbitration is $500, but you need to go to bat for the merchant to say this is a legal transaction and it needs to be authorized. It's not always going to happen unless your name is Amazon, Walmart, even American Airlines. They get charged back all the time on people that are late for flights. It just recently happened to a friend of mine. He was late for a flight, and American Airlines gave him not valid information. So he flew, and then he called Chase Bank and issued a chargeback, and Chase awarded it. Not fair. So, but
on the charges on your platform, what are the charges for doing an ACH?
ACH is dependent on volume, are going to run anywhere from 20 cents to 50 cents transaction.
Okay.
And I know that's a pretty wide range, but they're always going to fall into that range.
Yeah, no, I mean that's a charge that's negligible. I've talked to a couple of agencies over the years where, they just absorb all of the fees. And so I'll just let's say that it's a 20% fee, just to pick a number, and a debtor's putting $1,000 on the credit card. And if there's a 3% charge from the payment processor, you're giving up 15% of your fee.
Correct.
I just don't see how agencies can really do that in any sustainable way, of just giving away 15% of your fees to a merchant processor.
Right. So there's a big chunk of them. I can tell you this, that almost every business, whether they're baking in their fees into the product or they're disclosing it the way it's supposed to, here's our free option, here's our cash option. Convenience fees are going to proliferate over the next 12 to 24 months, and everybody's going to do them. Now, creditors in the arms space, creditors are going to come back and go, no, we don't want that to be an additional charge, or a debt buyer says we don't want that, because the debt buyers are the one type of collection agency that only should take debit card. Don't take credit cards, because the government and the CFPB was really coming down, and Visa, and specifically Rohit Chopra, was coming down on. He just didn't want to see people taking one debt and moving it on to another debt. Okay.
I've heard that.
Yeah. So Visa, when Visa came out and said, we're not going to take payments anymore from collection agencies, I spent a lot of time with Scott Purcell and the ACA and their legal team and Visa. And we basically told them, we said, we're going to get our debt buyers to do debit card only, but you cannot do this to the industry. And they basically said, okay, we agree with you. And they walked away and didn't do anything. Caused a lot of grief about a week. But, so
I put my email address in the chat. So if anybody has any additional questions, feel free to email me. And Kevin's got his email if you want to write directly to him. We're at double the 20 minutes, but this was well worth it. Thank you very much, Kevin. We really appreciate it.
Thank you, Kevin.
Couple of upcoming dates. Tuesday, April 29th, 12 p.m. Eastern. We're very busy here at the association. We have a webinar that's presented by CCAV and the Credit Research Foundation. For those of you that don't know, CCAV is a platinum partner of Credit Research Foundation, and we're presenting a webinar on California's new collection law regarding the expansion of Rosenthal to commercial collections. And so if you're interested in signing up, email me. Also, a little bit down the road, October 8th through the 11th is the annual conference of CCA of A. It's going to be in beautiful Delray Beach, Florida at the Opal Grand Resort. So mark your calendars. We've got next Tuesday and then October 8th through the 11th. Kevin, a huge thank you. And Umberto, thank you very much. It was wonderful to see everybody, and we hope to see you again at the next 20-minute talk.
Great. Enjoy.
Thank you, Kevin.
Thank
Thank
you,
you,
Kevin.
everybody.
Thank you.
Thanks, everyone.
Thank you. All right. Have a great day. See you, Annette.